Welcome, Bloomberg Television Worldwide. Good morning to you, Betty Lou, and with us, Mohammed El-Erian of Pimco. Mohammed, my note this week is a 30-year bond in, five-year break-evens come in. There's a real whiff here of disinflation. Is part of the new normal the threat of deflation?
Yes, it is. And the market is pricing in a few things. First, the fact that data has weakened across the board. Secondly, the recognition by the policymakers that the outlook is weak and is unusually uncertain. And third, the fear that even a small increase in the probability of deflation, because it's such a big outcome, even a small increase in that probability can make a big difference in how much people want to self-insure. So what you've seen is people recognize that deflation is not yet the dominant scenario. It's not the base case. It's a risk scenario. But a small increase in the probability of that risk scenario is pushing people to self-insure more.
Was the action of the Fed this week their idea of a small increase in risk, or are they just asymmetric and looking for a bigger risk of disinflation or deflation?
I think the Fed went from being in a tightening mode because it was reducing its balance sheet to being neutral in the sense it was it's maintaining its balance sheet. Most people were hoping that they would do more, that they would start easing by expanding their balance sheet. The reality, though, Tom, and you've heard me say that, is we should not over-depend on the Fed. The Fed does not have enough instruments for what we're looking at. You need other agencies to get involved. And as you've heard Bill Gross and I say, structural problems require structural solution. We're not getting any structural solutions.
Ken, go ahead.
There's a report out of Goldman Sachs this morning, 25 to 30% chance of another recession, of a double dip. Are they being too gloomy at Goldman or too optimistic?
You know, my gut, and I had said that when I was with you a couple of weeks ago, my gut said it was about 25%, and they've come in 25 to 30. It's very hard to be scientific here. Models are breaking down because of all these structural breaks. So there's a lot of judgment in this, Ken. They've come at 25 to 30. We put it at 25, but that is a meaningful number because of the consequences of another double dip.
You've had a terrific bond year at Pimco. What has been the actions of the last number of weeks? Not to get into the actual portfolio tactical efforts that you've done, but what is the theme in your Pimco morning meetings?
I think the theme is to continue to navigate for our clients this bumpy journey to the new normal, to make sure that we are positioned for both the journey and the destination. And that has involved going up in terms of quality, has involved shifting on a timely basis between duration in different parts of the world. But the concept is a very simple one. This is a bumpy journey.
Well, that was Pimco CEO Mohammed El-Erian talking with Tom Keene and Ken Prewitt.